Toque, 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 toque. Toque, 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 toque. What's up, Redford? Toque, toque, toque. Let's go. What's up, Brett? What's up, Igor? ¿Cómo están? ¿Cómo están? ¿Cómo están? What's up? What's up? Let's wait until our guest arrive today. I don't think he's going to. Viva Venezuela, papa. I got the feeling he's not gonna show up. I hope he does. He was very loud. Dr. Prince J, I think that's you. I think you did come. Amazing. I think that's you. Toque, 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 toque. Thank you, Brett. Why is it not? Okay, invite. Invite. Dr. Prince, if you're still here, can you please comment on the chat so I can add you to the panel? Right here. Invite. Sent. All you have to do is perfecto. What's up, Mr. Prince? Is that your name?
That is my name.
That is your name.
Feel free
Amazing.
to wear it
Amazing.
out.
What was that?
He said, feel free to wear it out.
Perfect, Dr.
But after a
Prince.
while, it might cost you. How you doing today, Pedro?
Amazing, my brother. And since you're here, even better now. I thought you weren't gonna show up.
Oh yeah, why not? Why would
I
I?
don't
Why
know.
wouldn't I
Every
show up?
time I try to do this, invites people don't show up. But you did.
Well, I
Props on
think.
you.
Well, thank you. I appreciate the props. I looked at this as an opportunity for you and me to not do the typical thing, and instead, I don't know if it's okay. I don't know if you're
Recording
open
in
to it.
progress.
I'm recording on my side,
100%.
if that's
Yeah,
all
yeah,
right with you.
100%. 100%.
But like part of why I was excited for this conversation is because I think uh, well, I looked you up a little bit, if that's okay.
Love it.
You do a lot of work in the community, and I got to say, I'm grateful for what you've done as far as information. I
Don't
see
do
that.
that. Now I'm gonna feel really bad if I have to.
No,
No,
no, no.
I'm
I
just kidding. Go
mean,
ahead. Go ahead. I'm just messing with you,
it's
bro.
okay. At the end of the day, we can agree to disagree
100%.
fairly, right? But where I agree with you is that you do a great job of providing a little bit more education than typical agents do. And for that, I got to applaud you. You do an amazing job. And I just want to give you your flowers and your credit where your credit is due.
I tried.
Um,
I tried.
so, secondly, aside from just having this conversation, I feel that we're in two separate markets. And I thought maybe, if anything, we could have a conversation where we still address some of the same points that we were looking to in a way to maybe clarify and remove a lot of the noise that gets brought in along with our financial industry, right? Would that be fair for us to do?
100%.
Okay.
But I don't think
All
we
right.
are in a different market though. We're in the same
You don't
market.
think so?
100% not. We're in the same market.
Oh well,
We try to
feel
help
free to
every
show
family
love.
that we encounter.
Oh well, that's definitely true. Yes, but there are definitely niches, right?
Yeah, 100%.
So, like, what would you say, or how would you describe your typical client to be? Because I think that we might have different niches. We might be, again, we have the same goal: help as many families as possible. Couldn't agree more. but like maybe what are you looking for specifically with your type of clientele?
Help them with life insurance, help them get better, get some information, financial information, so they from then on they can make a more educated and informed education on what they want. One thing that we are
Okay.
in the same, why I tell you that we're in the same niche is because, or the same market is because I'm a pro term guy. I don't hate term.
Okay.
I'm 100% pro term. But
I don't hate I'm glad you said that because I don't hate IULs. It's just that, and I understand the IUL. I just haven't seen many reports where it's positively spoken about. So that's one of the things that I use as an opportunity and a tool to create more awareness around both the IUL, what the negative commentary is, and then also what some of the other information out there is saying as well. You know, like more of a buyer beware,
and
right?
but Prince, to be uh to be honest, are you with Primerica?
Oh yeah, by all
Okay,
means. You're with Wealth World Financial Group, yeah.
correct. Why am
So
I? What
we
the
have the
reason why?
same we have the same like kind of lineage in A.L. Williams with Hubert Humphrey being the founder of WFG, right?
Yes and no. Yes, yes, yes. But
Oh, okay, all right.
the lineage is not Art Williams. The lineage is actually Amway.
Is
If
actually
you go back, if you really want to go back to the genesis, to the beginning, it didn't start
okay.
with Art Williams. It started with Amway.
Amway, okay,
Art Williams was a marketing company. They were just added insurance into the marketing.
all right,
When Hubert Humphreys came into play from Amway, that's when the distribution model that you and I know came into formation.
okay. But
Because
now,
of the same, we have the same model as Amway. So Amway's our actual
okay,
genesis.
so
And
Hubert Humphrey was not a member of Primerica as a
yes,
leading.
be
He was or he was not.
correct, he was. So
Okay,
the
so
insurance
like
portion of the sale came from Art Williams. The
okay,
distribution model comes from Amway. That's what I'm trying to say.
okay. All right. So then, in other words, like for as far as spreading awareness, spreading education, and overall financial services in the form of insurance, the distribution model couldn't disagree comes from Amway,
Correct.
right?
Correct.
Primerica brings on a different. Well, A.L. Williams at that time creates the whole buy term and invest the difference, in which Hubert Humphrey is a member of that organization, right?
It wasn't
He's a
Primerica.
top.
Hubert Humphrey was never part of Primerica as you know it.
Right. He was part of A.L. Williams
Correct.
before it became Primerica.
Correct.
Before all of their different transitions, so to speak, before they became a publicly traded company.
Correct.
Right. So in that regard, the method and how we distribute information, the more people that we know, and the more people that we have providing awareness about the type of services that we offer, is the mechanism for how many of us generate our commissions. Right.
Yeah. And let me ask you before we
Yeah.
jump into product and knowledge about product. Buy term and invest the difference.
All right.
How do you feel about that motto?
Well, I think it's kind of safe to say it's a little bit outdated given the changes in the economic market, given changes in the financial services industry as well, different regulations. And because Primerica is regulated by multiple organizations, I think, buy term is definitely, a great concept. Invest the difference is where we kind of get into. That's the part that's probably outdated in today's economy, in today's climate. And here's why I'll say that, right? Is because, well, I come from a family of indigenous people, right? And people who have also who've come to this country indirectly of their own choice, right? And the system wasn't always created in a fair way to give those people a fair shake at the economy, right? Things that became important to the overall American dream, though, I think a lot of people have in common today is home ownership and just being able to, you know, enjoy their life on their terms and have enough money to do it. Hopefully healthy, if we can agree on that. Yeah.
Yeah.
So with that in mind, because Primerica also offers mortgages or mortgage loan brokerage services, it's kind of it is an outdated concept within what most people understand about Primerica being mostly an insurance company, but doesn't really address the investment and the debt crusade that Primerica has through its mortgage program. Because like our goal, like yours is to help people become financially free. Yes,
100%.
I want people to have fewer debts in their life as far as their financial freedom goes, risk protection included, right? And so because in my review of the buy term and invest the difference product or service model, it's really how do we create a more customized financial system or service for a client that has multiple goals or really one goal, but we're using different components to achieve that same mechanism when not everybody speaks together, right?
Is
Like,
debt or is debt good or bad?
well, I mean, among specialists, it's bad, right? Like, I would say, because I believe more in the term model of insurance products, right? Mostly because, hey, my philosophy is for the working years, I should be covered. I should be protected. My income my family should not have to worry about my financial obligations to them if something were to happen to me,
Okay.
right? So have the term insurance, yes. But amongst specialists like yourself, well, you correct me if I'm wrong. Like, your philosophy is full protection for the entirety of your life because we know death is guaranteed.
Yes.
Well, I mean, I think you want to maybe add on to that, or maybe you could clarify if I'm not getting that right, because I don't want this to be,
No,
like,
no. And we're going to go back into, let's go back to buy term and invest a different as a concept.
okay.
If you understand the concept where it began,
Well, well,
why?
hold on. Before you do that, though, like, what's your take on whole life? Like, what's your perspective of the
I will
use?
get into that,
Okay, all right,
but
perfect, perfect.
you explain a little bit about the buy term and invest a difference. If we understand the concept and where it came from Art Williams, his dad passing away, and him having a whole life. I think it was Prudential, his whole life. I don't remember, but it was a P company. Had a whole life.
Was prediction.
It was Prudential. Okay, and his cousin came into him and said, "You know what, Art? If you had a term policy and you had put the difference of what the price of the term with the price of a whole life, that difference, if you had put it in the market, you would have gotten this amount of coverage and this amount of money in the market on your
Okay,
portfolio."
right.
And it made all the sense in the world. Because life insurance, if you see it from perspective, from the back, life insurance makes no sense whatsoever. If you see a term policy and you're 30 and you see, man, I spent all this money and I didn't use it, I wasted all this money. It makes absolutely no sense when you see it from the back. But when you're day one and you pay $100 into a term policy and you die the next day and you put $100 and now you get $1 million in coverage, it makes absolutely sense. So get that. So buy term and invest the difference. It requires a difference to be made. So
Right.
yeah,
So
just from the genesis of the whole preface,
right.
you are a replacing company, not a life insurance sales company. You're here to replace a product. The difference. Without a whole life, there's no difference. Without an IUL, there's no difference. You just buy term and investing. There's no difference.
Absolutely.
The moment you
Absolutely.
add a difference, it had to have a permanent policy attached to the whole equation.
Right.
So just from there, the whole trainings, everything that you've been trained on, it's about how to replace an IUL, how to replace a whole life. Why is
No,
it a
it
whole?
hasn't.
Well, you don't, because I mean you're different in most Primerica agents. Most Primerica agents, if
Well,
you ask them about their product, they don't know much about term policies, and we're gonna go
well,
into that.
I would say that it's also based on what kind of agent you're talking to.
Yeah,
Because if you're
100%.
talking to a brand new agent
How long you been in
who,
Primerica?
3 years now.
Are you an RVP?
No, I'm not an RVP.
DR?
I'm a district leader.
District leader deal. Okay. Okay. So
So
now,
like if you're thinking about what my compensation is,
no, no, no,
do you
100% no, because I don't care about compensation. Dude, I'm with
okay, no,
WFG.
but like
No, no,
I
I
mean
don't
like
care.
I'm cool with transparency as far
No,
as
no, I
like
don't
what
care,
my
brother. I
compensation.
promise
All
you, I'm
right.
not looking for this. This is not a.
All right.
I'm gonna pay you more. This is not going to go there. It's not gonna go on
Oh,
there at all. Okay, so buy term and invest different is like you said it, outdated. Makes no sense in nowadays. Now, you talk to me about what do you think about whole life being my the preface behind whole life is a policy that is there when you die. Yes. If we're buying a
well, I agree.
life insurance,
Right.
you want to have a life insurance when you pass away. You don't want to have life insurance just for a portion of your time. Because in order for you to be self-insured, which is, by the way, is an oxymoron, you cannot be self-insured. Because when you're insured, it means you're transferring the risk to somebody. If you're self-insured, you're transferring the risk back to you, which is stupid.
No, it's not. It's
100%.
actually quite
What is
achievable.
your self-insurance number? How much you gotta
Well,
have in your you gotta have to be self-insured?
well, I think that probably will come better, and maybe I think you said we were going to discuss products a little bit later on. So like,
Yeah, yeah.
maybe I should save that part for the product conversation, part of the conversation.
Okay. Let's
But
let's
as you
go into
said,
that.
like
Let's
the
go.
original model of A.L. Williams, like with investing the difference without a comparison into a whole life, which was the product at the time that A.L. Williams was primarily affected, personally impacted by, and I think it's safe to say, like, if someone hurt your family, you're going to go after
It's a
that
great
person.
crusader.
Right.
100%.
But now, like, if we're not replacing anything and we're not comparing it to anything else, we're simply saying invest and be debt free.
Bad
Right.
debt.
Say again.
Bad debt. There's good
Bad
debt.
debt. Yes.
There's good
There
debt.
is such a thing as good debt, but good debt eventually becomes an asset if done properly.
Correct.
So,
And that's how you want to
but
do it.
yes, I mean that's the way that I focus on doing it for my clients. Like we are individual people, right? So though we do have company names behind us, as vendors, ultimately the services that you and I provide are what our clients are, I guess, buying as a form of service. Like our ability to take care of their families and make sure that their best interest is at, at, at the forefront of our mission.
And the forefront of your mission is get a term policy as cheap as possible and invest the most you can into an investment vehicle, correct?
Yes, and then also for homes, for those that want to
Yeah, but we're
purchase
not going to go into
homes.
that because that's not Primerica. You go through
Well, I mean
Rocket Mortgages.
that is no that
That's a
it is Primerica
different.
because no, it's not.
Yes and
It's
no.
totally
How is it
no,
Primerica?
totally yes. Well, tell me how no. Let's go with that
Because
first.
Primerica is not offering that service. You go through a third party.
I mean,
It's like you. If
Primerica
you're a
Financial
mortgage
Services.
agent, you're not doing the mortgages through Primerica.
Well,
You're
let
doing
me
it
let
through
me
Rocket Mortgages.
firstly let me dial it back and specify what I do. Okay, I have a 214's license. I have a Series
Oh, you're
6
in Florida.
license. And I also
Nice.
have a mortgage loan originator's license. So I operate in three different portions of financial services, right? For the most part, not even for the most part, our life insurance is an in-house product, right? The investments portion is a brokerage.
In
We
house.
represent over 40 different investment companies.
But do you do it in house
For
too? Through PFS?
no, through PFSI certainly,
Who,
right? And
who's your broker
and
dealer?
that's the same thing.
Who's the broker dealer?
Well, PFSI is a broker dealer,
Primerica Financial Services.
right?
And the
And
mortgages?
so Primerica Mortgages is,
Is it Primerica
also
Mortgages or is it Rocket Mortgage?
it's Primerica Mortgage that has a strategic pinnacle partnership with Rocket Mortgage and Spring EQ. And again, like this is what I know. These are the licenses that I have. This is what I'm able to do, which for the most part is not the general Primerican representative,
Okay.
right?
But
So
let's not get
if we're
into the
having a
mortgages.
conversation, I want, for me, it is. So, if we're going to speak, I definitely want to be more about you and I and what we're both capable of doing, because that
100%. But
helps
that's
us create more,
but the mortgages
awareness.
has nothing to do with life insurance.
Well, it does have something to do with life
How?
insurance.
How the conversation
Well,
started between you and I.
the conversation between you and I started with me posting on Threads about a gentleman from a certain organization, who was talking about term life insurance. And I expressed my sentiments and my opinions on what's commonly known about IULs, and that in my commentary and in my opinion that I expressed, how it seemed as though he seemed a little bit stuck on the subject, while I've seen him speak a little bit more empathetically towards the other side of the table, right? And I didn't feel like that his description of term life was accurate. And I thought it also just neglected a big part of finances that most people are concerned about, which is their mortgage. Which is why I got that license, because I wanted to help create more homeowners, and I also wanted to provide a little bit more of the piece of American pie that I feel that we all are deserving of.
Let me ask you a question. Uh,
Sure.
because I'm reading here that if life insurance is only for the working years,
Okay.
why is there such thing as final expenses?
Well, there are final expenses, and that's generally a product that's offered um, in kind of like replacement of life insurance for someone who might not be able to afford life insurance coverages that might be too expensive for them in their budget.
No, no, no.
Uh,
Final expenses
it's a
it's a
it's a
life insurance
program that,
policy.
say again.
Final expenses is a life insurance product. It's a whole
Well,
life.
but it is right, but it's more so for just the expenses of the funeral. There's no, I guess we might call it "I love you" money, right?
Okay.
There's nothing additional aside from the wake cost, any other potential cost that might come with laying a loved one to rest.
Here's my take
So,
on final expenses.
okay,
I don't like final expenses, but the reason why we have final expenses nowadays is because buy term and invest failed. People are coming to an age of retirement without any protection, without enough money to retire, and now they become a burden to their families because now families cannot afford to put them in a funeral home and then in a cemetery afterwards. How many
I guess
GoFundMe's? How many GoFundMe's do you see daily,
I see a
Fred?
lot of them, and I
So
mean, you're also
they mean
highlighting a
that
big
if
part
you
of
don't think there's a
why
need for
I
that,
want to
you're
advocate for the
disconnected
investment side.
with your own community.
I
Within
mean,
your
this is
own
also why.
community, do you see GoFundMe's go daily because people cannot afford to pay for funerals?
I mean, not just in my own community, but in all communities.
So then there's a disconnection. If you want to help your
Well,
community, why are you helping them with the product that you know is not gonna pay out 98% of the chances?
well,
And then people
there's
would
a
have
saying
to
that goes.
to resort to final expenses.
There's a saying that goes, though, if you didn't come from a wealthy family, a wealthy family should come from you,
100%.
right?
And what's the cheapest way you can buy
So,
wealth?
I mean, one of the easiest ways to do that, we definitely agree, is life insurance, right? So
And
now here's something that I know is something I can't do with my term insurance provider, right? Because there are restrictions on providing insurance for anyone over the age of 65. Our company puts a cap on how many years we would offer a potential client any life insurance. If it doesn't make sense, we're really not going to do it. Especially if it's not in the client's best interest, right?
is it
And
not?
I mean, oftentimes when insurance is being requested, it's usually because it's already too late, right? So if it's already too late and a person has reached those, the end of their working years and they don't have the retirement, or they didn't have someone like myself who cared about their ability to retire in the future, which is why I want to, spread more awareness amongst my generation, so that way I don't become the the last generation of family members and loved ones who aren't leaving anything of greater value for our family, right? So, if that's not being done, then unfortunately we got to move on to something else. I think one of the opportunities for me is being able to show a family how to use, especially, since that generation, they may be dying without retirement benefits or life insurance. A lot of them are homeowners. So using the
Not even
home's
though.
equity,
Not even.
well, using the home's equity is another option that I'm able to provide my clients to give them maybe a little bit more dignity in their passing years.
Okay. And do you see how an IUL can be compared to a home equity?
Well,
It
it,
builds up
it
on years. It's not going to be as fast as a mutual fund or ETF. But if you pay
right.
over the years, it actually may help you in the future.
Well, I think you're aware that one of the financial strategies most financial advisors teach their clients is debt stacking, right? It's one of the primary things that Primerica does, I would say, or that I like about Primerica, is that I provide a financial needs analysis for my client. I'm able to look at what their current debts are and say, hey, based on this analysis, we could pay this debt off a little bit faster, free up some cash flow, so that way, right now, maybe you can invest, but in the future, you can. And here's how we'll be able to do that with some found money,
We
right?
all do that.
So,
We all do that. That's not
right. I mean, like,
proprietary of
it's
Primerica.
just, it's not exactly, again, like I said, it's something that most financial advisors, at least the ones that are worth their salt, are doing. We're not just selling products. We're saying, here's your game plan towards debt freedom, right? Financial freedom.
Are you
Now,
securities licensed,
I
Prince?
am. Remember, I mentioned that I have a Series 6 license and a mortgage loan license as well,
Perfect.
as well as a 214. So, also, I when I looked you up, I didn't find you on broker check. Do you
I'm
do
not
you have
securities licensed.
your nine securities license? Okay.
No.
Um, so, well, in regards to like the question that you asked, as far as like the equity, or like the how fast that grows. Well, I mean, the the current legislation is showing movements towards 50-year loans, right? Um, and I don't think that that's necessarily a great thing, but regardless of what my client may desire, aside from my own personal beliefs, I'm still going to show my client how to pay the mortgage off faster
Why would
than
you
the
want to
term
do
of
that?
their loan. Well, the reason why I would want to do that is so that way, one, the money that we are able to then take from paying for a mortgage, now we can put that into an investment vehicle. And that's also something that can grow exponentially larger than just letting it sit there, or
But in,
like
in a
putting
house,
it
you're not
into
letting
a,
it sit.
well, I mean, remember, the
The
house
moment you
becomes,
free that
the
up, you
home
might
becomes
free
an
some money,
asset.
but you're gonna pay more in taxes. You know that, right?
Well, well, here it is that like if you have more money, you're not paying a mortgage, and there's equity in the land, then you're kind of reducing the cost of what your
How do you
tax
how do you take the
obligation is.
equity?
Well, you could use it for a number of different things. You
How do you
could,
take the equity from a home?
well, you can use it in the form of a home equity line of credit or home equity
And what
loan.
happens then? Then
Well,
you get another
in certain
semi-mortgage.
instances where we're looking at, well, remember, we've paid off the mortgage. So now
You
they've
have to
got
get another
equity that's
mortgage to
building
get the
up.
equity out. You have to have a deed on the equity.
Well, I mean, but
There's
the
a
client
collateral.
doesn't have to use the entirety of their line of credit or the exact amount. I mean, that's what a line of credit would be for an unknown amount of necessities for different varying things, right? Maybe helping out with putting a child through college or purchasing a car for the child.
And then getting debt.
Um, well, it's a much cheaper debt than what they could be dealing with now.
How do you know that?
again, I for my clients, I provide them the financial needs analysis. If they
on
have
on your
debt,
3 years.
right, or in the 30 years, the 50 year, whatever term it is that they get for their loan, I'm still able to create a game plan for them, right? So
Prince, it's been
yes,
proven. It's been proven. No wealthy
proven.
person, there no wealthy person got to wealth without debt.
Well, I
There's not
mean, you
such thing
still
as wealth
now,
without getting in debt. Positive
but
debt.
now remember, Pedro, you said
Yes, it was Primerica,
debt,
Michael.
right? Now, are we talking about good debt or are we talking about bad debt,
Debt.
right?
Is it
So
good or
here it
bad? Is
is
on
that,
you. Good and
hey,
bad,
good or
it
bad
goes
is
it
up
goes
to
on you.
it's all personal perspective, right?
Yeah.
However, if we're using it for the right purposes and we still have a game plan to pay off any mortgage, whether it's a first or a second, faster than the term of the mortgage loan, I still think that I'm able to help my clients out significantly more than just focusing on the buy term and invest the difference model.
Okay. So you don't want to talk about buy term and invest. You just want to get it to the mortgage side of the conversation. Because every time we try to
I
talk about
know,
that, you want to put it on. I also specialize in mortgage, and would divert the
well,
conversation into mortgages.
well, it wouldn't that it's not that it diverts the conversation. It's just that if we're gonna speak to me and you about what it is that we do and
Okay. And then
the
and
full
then
capacity.
let's forget about what
So
you do. Let's forget about what you know about IUL.
okay,
Let's jump into
again,
that.
that's why I said that's why at the beginning I said I think this is a conversation for us to spread awareness about
Yeah.
the kinds of products that we offer and the kinds of clients that maybe our products and services benefit, right? Because I think that we're in different niches. We have the same goal, financial freedom, help as many families as possible. How we do that is just different. And I have a niche or a market and a client, a specific client in mind that needs the kind of services that I offer, and I think you also have the same as well. So that's why, like you're right. I don't think that we can have a conversation around the whole buy term and invest the difference, right? Which might get diverted, as you say, because I have a mortgage license, but I wouldn't be able to just stop at the buy term and
No,
invest
we can have a normal
mechanism,
conversation
right?
about life insurance and investments if you want to.
And mortgages too,
Okay.
or just
And mortgages too.
financial
We already
freedom,
spoke about mortgage. Let's talk
right?
about IUL. What do you know about
Okay.
IULs? What is how does your
Oh,
knowledge about IULs?
index universal life insurance. Well, I know that there are definitely two types of index universal life insurance.
What are they?
Um, well, you have fixed, and then you have variable,
Then
and then you
you
also
talk
have
about ULs. There's three types of UL:
okay,
index, variable, and fixed.
okay. So, well, maybe you should go ahead and continue to elaborate
No,
on
no,
your
no, no.
specialty
Because
with
the
the
conversation
IUL.
started because you were talking about IUL, and I told you that IUL is not a scam. You know.
Okay. Well, let's just go to that part then. Which help me clarify and help me understand better from your perspective. What are some of the common highlighted scam points that people talk about, and then please disprove those about how you do that. Because there are so many questions that I have. Like how do you not overload or implode an IUL when in a down year or a down couple of years and I don't even know what your cap is. So like, maybe you offer a different cap level than most IULs are reported to have. I think that's just a great opportunity for you to highlight some of those things that most people hear are the scams. So what do you hear maybe from most Primerica people about why IULs are scams?
Well, for the past 2 years, they were very loud about IULs being a scam. For the past year, now they changed the conversation and it went from, well, it's not that bad, but it's not for everyone, which we can agree. It's not for everyone. But you said, and let me quote, this is your reading, and actually, I can actually pull this up. Say, damn, homie sounds stuck on this subject. The point of insurance is risk protection. During the working years, and it fits very person's budget, especially when paired with an actual investment, because IULs and whole life rob people of the chances to create generational wealth. The only thing those consumers can depend on is expensive robbing you blind whole life IUL insurance. Why not get an actual financial advisor on on the show to explain term, investments, and mortgages? Happy to volunteer. Tell me how IUL robs of generational wealth.
So help me understand. Are there
Don't, I'm
caps
not
on
gonna
the?
help you. I want you to tell me how IUL robs of generational wealth.
Well, I just said it. Then the caps on the policies, the service fees that are often placed cause the policy's cash value component to depreciate very quickly. Um, and I mean, there are instances where they've been marketed and mismarketed as investment vehicles, where one such experience recently was Kyle Bush, who was on, I forget which, I think it was, oh my goodness, I forget which show, which network it was on, where two-time NASCAR champion expressed himself that he was robbed of close to $10 million because of an IUL salesperson. So those are my bullet points as to the scam points.
Okay. Let me ask you a
Feel free to
question, Prince. Let me,
disprove
let
any
me
of
ask
that.
you a question. Has anybody
Yes.
ever lost money with an advisor in the market?
Oh, now that would be. I don't know if that's such a question you want to answer because that's a little bit of a double-edged question for you.
No. Has anybody ever
Well,
lost money in the market with an advisor?
if IULs are so great and it was marketed by a so-called financial advisor who specialized in selling IUL policies, which then robs a consumer who comes forward with this news on national news. I'm kind of stuck seeing how it looks good for the IUL.
I'm asking you, has anybody ever lost money and sued his financial advisor with investments?
This, with investments,
Mm-hmm.
well, the bad ones certainly.
The bad ones. Who's the bad one? The investment or the agent?
Well, both,
Oh, the investments are bad?
both. It can be both.
Oh, all investment can be bad.
It can be both.
Okay.
If a bad advisor chose a bad investment, then that sounds like both in that instance. I think it's going to be a relative response.
Look, and the reason why I'm asking you, because I'm going to answer your question, but I want you to see this. Since we're going to talk about Kyle Busch, what do you think about that? Was that a the market was bad, the investment portfolio was bad, or he got served with a bad agent?
Looks like it was a bad agent.
Okay, good. Same thing happened with Kyle Busch. Kyle Busch
Oh, I
got
don't. I don't.
served with
I
a
don't deny
very
it.
bad
I don't
agent.
disagree with that. I don't disagree with that at all. It's just that there's so many instances of not just Kyle Bush, but other people who also expressed the same sentiment.
See, when you lose money because of a product or a vehicle, you're not gonna blame the sell people. You're gonna blame the product, and
Well,
that's what
I
happened.
think we're saying both.
If
I think we're saying in
what
that
happened?
instance we're saying
Kyle
both.
Busch, Kyle Busch, and tell you this, and I've said it public. I made a video about this too. IUL is gonna do what the IUL is going to do, but the agent did everything in his hands to actually screw Kyle Busch. There's
And
things that's
so,
called 1035. Imagine,
Right.
You're not gonna understand this, but he actually reset it. His policy every 2 years to gain
Right.
commission all over again. We get commission
Attorney.
once. What he did is
Right.
every 2 years he did a 1035 exchange to reset the policy, to reset all the fees, which we know they're front loaded product. So he get commission once again. And what happens was depleted Carl's Bush account year after year. Not because the IUL was bad, it was because
Right.
it was done through a awful, awful agent.
So, okay, so then are you saying that you don't do that to your clients?
One
Because
hundred percent
again,
not. Are you
we're
saying
expressing that
are you
we're
saying that
expressing
you
that
do this to your clients investment?
absolutely not.
There you go.
Absolutely not.
There
But
you go.
again, we're having a conversation about what you specialize in doing, right?
One
Like what do
hundred
you
percent.
do for your clients?
One
So
hundred
like
percent.
that's what I'm asking.
But
You know, come on,
but
Coach,
you say
let's do
that
it.
the IUL robs of personal generational wealth. Tell me how. If you do it correctly, let's take the extremes out. Extremes out.
Well,
Average. How
again,
it does it.
this is your opportunity to explain to me how it creates generational wealth. Let's do that.
Because if you never your family will never get less money that you put in into an
Okay,
IUL.
so now, so here's the question that I want to ask towards that. What is the cap? What's the maximum a person could receive as the return? If there's a floor, there's always going to be a ceiling.
Nope.
So, what's the
There are
ceiling?
indices with no ceiling.
There's an IUL with no ceiling.
IUL.
So,
Let's understand first thing for Prince. IUL is not a general thing. IUL is just a product. It's just a chassis. Inside
okay,
of each chassis, each company, each carrier will do different things and will add different indices into the product. There's no
so
such
you
thing
can
as a
show
one
me.
IUL.
So you can show like if you run a quote for me for an IUL, you can show me that it's not going to. It's I'm not going to be robbed. I'm gonna get a
What do you
good
mean
product
robbed?
that's
What do you mean
I'm not going
robbed?
to have it every 2 year policy, right? Like that's going to be expressly stated in the quote, right? That there's no cap on my return on investment in an index universal life insurance policy. You're saying that those 2 points are definitely going to be on my insurance quote.
It's not going to be in your insurance quote because that's not the company. That's not the
Well,
product. The 1035 is not the IUL. It's not the carrier calling you and doing a 1035. It's the agent.
okay, so is there an agent statement where those two bullet points are addressed?
I can do that. I can write you an affidavit if you want, sign and everything from me that I will never do a 1035 on yourself. Can you give
No, but
me an affidavit telling me that you're going to pay me 10% return? That your investment with you, if I invest with you, you're going to guarantee me 10% of every year?
I'm firstly, I'm a little bit confused because I'm not sure how. Like, are you an underwriter for your insurance
No,
company, or you
no.
like how do you go about like providing an IUL for your client? Because maybe that's the first place I should start. Like, if I'm a client, right, and this is your opportunity to win me over to the IUL conversation, right? I'm being non-biased. I want to just know
I know.
numbers.
I know.
I like
I know.
numbers.
But I'm
Okay.
scared of what you're about to ask.
Okay.
Because
Okay. Well, I mean,
that'll tell me everything that I need to know about life insurance, that your knowledge about life insurance. But go ahead.
well, I mean, this will give you. Hey, I'm asking as someone who is ignorant to life insurance,
Okay.
right?
Okay.
Here's your opportunity to answer all my questions as someone who doesn't know anything about life insurance and just satisfy my concerns about what I've heard or saw on Dr. Google,
Okay.
right? So I'm 42, right? I'm a non-smoker, right? Um, I'm a father, and I am also a home buyer, right? I also have a retirement plan. Let's say that it's got a couple of $1,000s there, right? And well, I've heard that IULs come with a cap.
Okay.
If you wrote me a quote or you provided me a life insurance like contract, do I have like a period of time in which I can say I'm no longer interested in that? Is that's number one?
I'm no longer interested in what? In the life insurance?
Yeah, hey, I looked at it, I thought about it. I don't want this type of insurance. Can I cancel it?
IUL is a life insurance product. Our life insurance product unilateral?
Well, I don't know, Pedro. I'm asking you. I'm a new
Okay, okay,
consumer.
so you're playing like you don't know anything. Yes, you can cancel your product at any given time.
Okay, like any given time, and I'll get my money
Any,
back. Well, okay,
it depends.
okay, depends on.
If you do it within 14 days, you get the whole premium back. That's
Okay, so I
buyer's
have
remorse. It's
14
a
days.
buyer's remorse clause.
Okay, so 14 days,
14
and
days.
I've been told that that you protect me from any loss.
Correct.
There's a,
From loss in the market.
what's
Correct.
is
Called
there a
floor.
percentage of like potential loss as well, or is it just at a certain like specified rate? Is that even a thing?
No. Any loss from the market, if the index performs below 0% in negative years, you're going to get zero as a return. It's a floor. You're protected from market loss.
Are there any service fees on an annual basis for this type of a?
Of course. It's a life insurance.
Okay, so does that mean that every year it's going to get more expensive, or is it going to stay fixed
It depends.
on?
Cost of insurance may go up, cost of the policy may go down. It depends on the growth on the
Okay,
policy.
but if I wanted to stay fixed, I don't want it to change. I just want to pay one premium every
You're
month.
going to pay the same
Is
premium. The price is not going to alter your premium. You can still continue
okay.
paying your premium. You don't have to increase your premium.
Okay. So I can get one that's has a fixed premium.
Correct. The premiums are
Okay.
fixed. But here's the beauty. ULs, Mr. Klein that doesn't know anything, UL is the only product. There's no other product or any insurance that will give you the flexibility to go up or down on your premiums. There's no other product in the insurance industry, auto, home, life, that
Okay.
gives you the flexibility of going up or down on premiums. So you can
I
actually
like
pay
that.
more money or
I
pay
like the
less in the case of an
flexibility of that.
emergency.
I like the flexibility of that, but I definitely just want to pay just one fixed amount.
You can go ahead and do that, and I'll create this policy so you pay the same amount for the rest of your life, or
Okay.
until you're 65 if you want to. You can stop
Now,
payments.
am I paying for two different things, or am I paying for just
You're
one thing?
paying for a
Is it
life insurance product.
okay? So like, are there tiers for the amount of coverage I get, like based on how much I'm paying, like, and
Of
what?
course, of course.
Okay,
As a life
so
insurance, health and age matters the most when we're making premiums, when calculating premiums.
okay.
Correct.
Well, I'm in great shape. Like I said, I'm not a smoker, right? How much would a policy like that cost so far?
A policy like what? We haven't even talked about what you need or anything.
Well, I would say
What are you looking for? You're looking for protection or you're looking for accumulation?
I'm looking for. Well, I want both.
Do you want both? Okay, good.
Can I get both?
You're going to get both, but
Okay.
you want to be insured up to the amount that you need, your insurable need, or you want to have a supplemental for retirement on the conversation.
Well, I'm very happy with my retirement plan.
Okay.
Uh,
So you don't, what
so
do
I
you need
really,
accumulation for then?
well, I mean, that's what my accumulation is. My retirement plan is my accumulation. I
Okay.
got a good
So
investment
when I ask you if
advisor.
you want to have accumulation on your policy, does that matter to you how much money you have in your policy, or do you just want to be covered for the rest of your life?
I mean, if I could get both,
But I know you
that's why
can
I'm
get both. But
asking. But
what's most important for you?
uh, I would say probably.
This is a two different conversation.
Well, what's different about the conversation? I'm not
Because
sure.
here's the thing: you're 42. If you want $1 million in coverage at 42, you're probably gonna have to pay $2,000 a month into a policy because
Okay.
you're looking for coverage for the rest of your life, not just for a specific period of time. If
Okay.
you're looking for accumulation, then I can give you $100,000 in death benefit protection because you don't care about the death benefit. You just want to accumulate as much money as possible for the next 30 years.
Well,
And that
I said
matters.
I wanted both.
$100,000
Yeah.
cost of insurance versus $1 million in cost of insurance.
Okay.
When you talk to your clients, and I'm talking now to Prince, does it matter if the client needs $500,000 or $2 million in coverage as far as premiums?
Well, if I was strictly talking only about the invest,
No,
you know,
protection. We're not talking about investment.
protection,
Protection. Doesn't the a $2 million policy versus a $500,000 policy? Is there a price difference?
there's a significant difference in price.
Okay. From a 10-year term and a 30-year term, is there a major significance in price?
Also,
Okay. When we talk about permanent product, cannot compare with a 30-year term because this is a policy that's potentially going to pay or going to be going to cover you for the next 50, 60, 70 years. So, of course, the cost of insurance is going to be higher on a permanent product. You're covered for more years first. And then, if you talk to me that you want an IUL for $1 million because that's what you need for the rest of your life, then the cost of insurance has to be for a 70-year period for $1 million.
well, when you say I need $1 million for the rest of my life, like how do I get $1 million for the rest of my life? Like, do I get that out of
With
the
a permanent
insurance
product.
product?
With a
With
permanent
the,
product.
what are you talking about? Just the death benefit? Or are you
Death
talking about
benefit.
like I get
Death
an
benefit.
accumulation of a
Death
million
benefit.
dollars? Just death benefit.
Correct. That's what you're looking for, right? That's what you're
We're
looking for.
going.
With a term policy, that's what you're looking for, right? With the life insurance, what are you looking for? Death benefit
Well,
protection. Death
with
benefit
term, I'm
protection.
looking for just pure protection. I'm not looking for accumulation.
Okay, with a permanent product, when we have a conversation about death benefit, the conversation is about death benefit. It's not about accumulation. You're looking for $1 million. That's what you told me. I want $1 million. Okay, I give you $1 million. Next.
Okay, so let's say that I'm more concerned about accumulation. I
Okay.
want a
Then
million
I give you
dollars.
less death benefit.
And so, like, how do I get the $1 million then?
In accumulation,
Yes, how do I get the $1 million in the accumulation?
well, we have to project how to get to $1 million from where you are right now. Just like you. How would you give someone $1
Okay.
million at age 75?
I perform a hypothetical. I mean, that's
Correct.
what the,
That's what we can do. Same thing. We work the same way.
but like now, are you able to choose and select which, like, well, okay, hold on. There's no cap on your product.
There are indices that have no caps.
Okay.
What
So
I'm
how
trying to
about
tell, what
this?
I'm trying to tell
How
you
about
is
this?
so you
How about
understand it. So
this?
you understand that, Prince. So you can understand it better. IULs do not set caps. The product do not set a cap.
Does the company set a cap?
No, indices, the funding of the IUL is what sets the caps.
Okay, let's do this, Pedro. Let's do this because I think I'm at a point in the conversation where I would much rather look at numbers, right? How about we set up?
But I'm still waiting for you to tell me how IULs wrap up
I'm trying to.
generational wealth.
Okay, well, let me go back to the conversation. Let me go back to the role play, right? Are there any fees on purchasing, or servicing of my index universal life insurance policy?
You probably know the answer to that. Are any fees to any product that you buy? Are there any fees to your term policies?
There is a one-time fee, but no ongoing fee like you mentioned there is in
There's no ongoing fees on the life insurance?
no. In the,
You're
in the
talking about,
example,
I'm not talking about commission. I'm about talking about
we're not talking about
fees.
commission.
Okay.
It's not talking about commission.
Okay.
It's talking
So
about
if I
fees.
buy a term policy for
Mhm.
$100 a month and it gives me $1 million, what is my fee on that policy?
a one-time fee of $65, and then the policy is in force for the rest of the term without any additional fees.
Prince, read the comments. Coach Don't Write is with Primerica. He's an SVP in Primerica.
Oh, there you go. Then there's an annual policy fee. We do have it. Well, thank you, Coach Dunright. There you go. There's an annual policy fee. So continue. I stand corrected. Hey, I don't have a
Perfect.
problem with being.
I know,
with
I know,
being
I know,
correct.
I know, I know.
Go ahead.
But let me tell you this, Prince. Every premium that you pay in a buy term and invest strategy, premiums on a term policy, it's a fee. It's a fixed cost.
Okay. So, and so you're saying that there are no, if there's no cap on your index universe, on your indices, or show me the numbers. Let's just do that.
And that's why I always do this. And thank you for being very civil and keeping it civil. Bro, when you talk about a product, the first thing that I always tell people, especially in Primerica, bro, is that you gotta know your own product before you talk about somebody else's product. Because then you run into someone like me that know your product and my product, and then things are gonna get ugly for you. Because if you don't understand that there's fees inside of your own term policy and fees are normal in life insurance, there's gotta be a cost. Otherwise, why would the insurance company keep you for 30 years if they're assuming all the risk for nothing in return?
Okay. I appreciate the clarification.
Now, let me. This is just one, but let me see if I can project from here. Display capture. Boom. One second.
$1,000, $2,000. Those are interesting price points.
What is it?
I said $1,000 to $2,000. Those are definitely interesting price points
On what?
on $1 million of coverage.
Yeah, about $100 a month for $1 million. Do you have any clients that are insured for $1 million?
No, I have clients that range in the $500 to $750,000 range.
How do you run the insurance need for your clients? What do you usually do? How do you usually get to the number?
So I get to the number based on the debt income mortgage expenses ratio. So
Do a dime?
yes, a dime,
Okay.
right?
How do you get someone to do $750,000? Run a dime for a normal, your last client. Don't give him a name. Don't give him the name. Don't give me the name. How do you run it? How do you run it?
Well, generally because the cost of my policies tend to be a little bit on the lower side of things, less than $1,000 per se,
How do you
right?
how
For
do
the
you get
same
to that
amount of
number?
coverage. Well, I calculate income, right? Like their income times 10, plus the cost of any debts like a mortgage or any other expenses that they might have that affect their credit score, right?
Hmm.
So credit card bills, uh, personal loans, things of that nature. After I calculate that, I also ask the question based on their income, how much do they want to live off of for the remaining time after retirement, based on what their interests are. If they say that they're going to retire at whatever year that might be, I run a calculation to show how they can get that amount. So to do that, I can do that two ways. One, I'll look at the cost of the insurance and then calculate what the minimum payment could be or the minimum contribution to an investment would be at a hypothetical fixed rate of 9% for the remaining time that they may be working, or during the term of their through the lifetime of their term. Now, doing it that way kind of offers me ability to almost make their insurance costs disappear.
Okay. Okay. So run me a dime. I make $50,000 a year, which is average. Is that average on your community?
You can say that.
Okay.
Yeah.
And let's say I'm owe about $20,000 in credit card and everything outside of my rent and home mortgage. And let's say that I owe $250,000 in my home. How would that dime look like?
All right. Give me 1 second. Let me pull up and I'll run it exactly as you gave it to me.
Okay. I can run that in back of my head.
That's cool. I'm glad you can.
By the way, while you look, those are
Okay.
some one company that I work with. You see where it says cap rate? That column right there? Those are the caps in some of the indices. First index, cap is 14%. Second one, cap is 10.25. The third one is uncapped. The fourth one is 25%. The fifth one is 13.25. The fifth one, it's uncapped. I mean, the sixth one is uncapped. Seventh is uncapped. Eighth is uncapped. Ninth is uncapped. 10th is uncapped. 11th is uncapped. Does that satisfy a little bit your request?
It does.
Perfect.
I mean, let's not also forget, I expressed that this is an opportunity for me to learn,
Yeah.
right? It's for education, for awareness. These are some of the things that I've been exposed to are the scams that are out there. So I look at this as an opportunity. You're teaching me stuff that, quite frankly, I didn't know. I appreciate it.
No problem, brother. That's what we're here for.
How much did you say was in retirement savings already?
None. Nothing.
Yeah. Okay. So you said my expenses were what?
About $20,000.
20,000?
Debt? About 20 grand.
20 grand.
Yeah. And this should be the easiest part of a life insurance sales conversation.
Well, for life insurance sales, maybe, but I'm not, remember, I don't do just life insurance. I'm also calculating investments, right? Doing something very similar, but just for a different consumer.
Gotcha.
So with it, or rather with a different approach.
Gotcha.
Okay.
Oh, so you're gonna run me everything that I need as far as life insurance and investments, how much I should invest?
Yes.
Okay. I got the feeling.
Okay. So I came up with an insurance need of, let's say, 8.5 million and a savings need of 18.4 million. Okay. Now, $2,000 per month, well, closer to $3,000 per month. And if I ran that, also a part of the investment approach, we run the investment side of the hypothetical. And because in my industry, with the securities license, I'm regulated on speaking about certain percentages. I'm going to use only the 9%. If you and I were sitting on a computer and faced, Zoom to Zoom, I would show you exactly what my
Yeah.
software shows me.
Yeah, yeah.
Okay.
Stay within your boundaries. I don't
Thank
want you to
you.
get. How do you get to
Appreciate
eight
that.
million
Thank you.
dollars in life insurance need?
Well, I mean, what I did was I calculated that based on a few things, but just going at it from what I felt was the best in the best interest of the client,
And you
not
think for
on
someone
anything
that makes
else.
50 grand a year needs $8 million in death benefit?
Well, when you gave me also 20,000, I was calculating some additional things. So just give me 1 second, Pedro.
Prince,
Yes, Pedro.
I'm trying not to be an asshole. I promise you. I'm
I mean,
containing myself not to be, because the asshole in me it's trying to get out. It's like a Hulk. It's trying to get out. On
I
Dime.
mean, you can either be an asshole
No,
or
no,
you
I'm
can
not.
not
I'm
be
not,
an
dude.
asshole.
You've been nice. You've been very very nice. Dude, you way overly overprotected me with a conversation that we just had. I would need
Yeah.
probably from 3/4 to $1 million in that benefit. Someone who makes 50 grand, and owes about 20 grand and $250,000 on the mortgage. We
Right.
didn't talk about kids, so I'm not even gonna add the E on dime. Just
I
as
hear
of
you.
those three first,
I'm showing you.
50
I'm
grand a
showing
year,
you.
that's equal to half a mil in coverage. 20 grand, that's 520 plus 250, that's 770. So if you would have said from 750 to $1 million, I would have said, yeah, you're good. But how you got to 8 millions is beyond me.
Well, I mean, what I did was I ran a financial need analysis,
But how?
and based on a
With the
few other.
can you run it to me? That investment, just run the life insurance portion.
Hey, let's go ahead and do a recorded follow up. Let's hop on a Zoom and we can do that together.
No,
Sound
because
fair?
Prince, because we're gonna talk about product, and when you talk about product knowledge,
Talk about
Prince,
products.
when you talk about IUL and you call it a rub, and that's why I called you out. Conscious. When you talk about IUL being a rub, and I don't blame you, brother. You grew up in a company. You were taught. You were recruited by a company that misrepresent IULs. And all you've heard and all they highlight is how bad IULs are. And so I'm not even going to talk about that on this conversation. What is crazy to me is that you work in a life insurance company. And this is the second time that I asked for someone to run a dime on me from Primerica, which is an easy conversation. That's basic. Dime is the most basic form of analysis for life insurance need. There's things that get way more complicated. But if you don't understand the basic of life insurance, how would you want to jump? If you don't understand the basic of term policy analysis, how do you jump from term policies to IUL, which is a more complex product? IUL is a very complex product to understand at first. Why don't you
Well,
specialize on term? Do not talk about IULs. Focus and say to your upline, God damn it, how come I don't even know how to run a D.I.M.E method? I'm a life insurance agent. I do all the things. I do mortgages. I do investments and everything, bro. But the most basic thing that we do for our clients, it's protection. Because you do the home, you do the little house, and the foundation of any financial analysis is that protection for today. And that is done through a term policy. If you don't know how to do that, how do you jump to, well, 5 years from now, 10 years from now, 30 years from now, you can get all this? If you sit with me and hey, Prince, I need life insurance. I saw you on social media and you tell me that I need $8 million in coverage and it's going to cost me $2,000 a month. I make 50 grand. I make $4,000 a month. How do you expect me to half of that
it's
put
the
it on a term
same
policy?
question I asked. It's the same question I'm asking for, like how a person is paying $2 million for coverage, and you
Who's
tell
paying
me
$2
two
million
thousand
for
dollars.
who's paying $2
Here
million
it
dollars
is.
for
I mean, the
coverage?
coverage amount that I was able to even quote you is way higher than what you're talking about, right? And the
Who
cost of that
who
insurance. Could you show me an insurance policy where you quote someone $8 million and it's only costing them less than $3,000 a month?
I showed you what?
Show me. Show me a policy for $8 million a month
When
for
did I
$8
show
million.
you that?
dollars. I'm asking you, can you show me? Here it is. I did a financial needs analysis. My software showed me the need was $8 million. I gave you the
How?
quote for $3,000, right? For less than $3,000. And I'm also able to now show you, I mean, using very similar numbers that you're talking about. If I were to cut the cost of insurance down to 750,000, my client only pays $187.09,
Is that
and
a
I'm
power
still
term or
able to pay.
precision?
That's a precision term.
How much for 750?
$187.89. 43-year-old man, 35-year term, non-smoker, $750,000 worth of coverage for $187.09. Now, if we're still talking about products, my guy, you just got a little bit insulting, a little bit too grandiose about less coverage that you're offering for still way more the cost of coverage. And you're not offering anybody anything other than expensive insurance.
Who is?
You are.
Why?
Exactly. That's a great
No,
question.
no, no. Why
Here it
why
is.
why
Here
are
it
you
is that
assuming that I'm
if I
offering
ran,
people?
hey, I readjusted. Here's the thing, right? Pedro, if we're staying on topic, the whole
Yeah.
point of the conversation again was to talk about the actual products and the clients that we serve. You're
Correct.
trying to use this as an opportunity to try to create some type of narrative that I don't know how to run a dime. I've created a dime. The dime gave me the income need and the insurance need. I quoted you what it was. And
What
then
was it?
I'm also giving you a second quote for an actual insurance need. If I'm saying like it's not $8 million and that I run a policy for $750,000 of coverage for 35 years, a precision term
Can you do it for 30
for a
years?
non-smoker. Can I do it for 30
Yeah,
years?
run it for 30 years.
I'll run it for 30
Can
years.
you do that for me?
And still running it for 30 years, it'll come out to $147.72. Now, the cost of which, if we're comparing it to what I previously quoted you of $2,800 a month, right? If we put the difference there, I'm definitely getting my client to multi-million dollar status.
I just ran a policy for 30 years. Hold on, let me see if I can actually arrest him right here. 30 years, $750,000. Living benefits, 108. Tell me, how is it that I actually do more expensive life insurance than you?
Okay, well, great job. You quoted me a little bit less.
A little bit, about 40 grand, $40 less.
There you go. Well, so now what are you gonna? Where's the investment to $1 million come from
We're
on your
talking about
side?
life insurance, bro.
Okay, but now we're still talking about what we're talking. We're comparing the
What are you
service, or
comparing?
rather, not
What are you
even
comparing?
comparing the services. We're talking about what it is that we do for our clients.
Now let me
That's
ask you.
what you do
Let
for
me
your
ask you a
client.
question. If
That's
I
a
do
great thing
this,
that you just did
if
for
I
your
take
client.
care of the client on the term policy and I send it to you, so you do the investment, which
Mhm.
client is going to be better off? The one that you do the term policy and investment, or the one that I do the term policy and you do the investment?
Now, if all you're selling them is the term policy, we have nothing to even butt heads about because that's a great plan. I like the cost of it. Cheaper cost, more coverage, lower cost. I love it.
And
More
what
money to
happens if
go
we get a better
towards their
coverage, a
investment.
cheaper coverage?
We're able to put more money towards their retirement plan.
Ooh, imagine that.
Come on. I mean, like, now
So
see,
having better
now we're
coverage
back to
helps
the
your
point of the
client.
conversation. It does. And see, again, I said it, even when you say I got loud in the comments in our thread, did I not say, hey, if you show me a better thing, bow down to it.
Okay. So,
Right? So
so now
I'm
that we talk,
acknowledging,
now we have
I
talked with
acknowledge
proof.
with
The
proof.
term
You have a
policies,
bit,
we have better term policies. And this is, again, with living benefits. If I run it without living benefits like yours, with just terminal, it's
no,
going to be less than $100.
no, I apologize. There are living benefits there. Oh, my apologies. There's also a child rider there too. Let me take the child rider. Oh, nope, still 142, just $5
Yeah. Yeah.
less. But
God.
still,
God.
you still got a great quality term there.
Yeah.
And if we could agree to that, then like, hey, again, it gives me the opportunity to still help our joint client to put more money towards their investment, so that way they're not stressed out in their retirement years, right?
That's why
If
I told
it,
you
it
I'm a
helps.
pro term guy, bro. If
Okay, and I mean,
you thought
like,
you were gonna get into an argument again, a guy that pushes for IUL for everything he does, you got the wrong person in front of you. I
all
do
right. I
defend
mean,
and I do defend and I do love IULs,
okay,
but
but now
I will
again,
never put a client when I sit down with clients and they're looking for permanent coverage, I would never put them on an IUL. There are different products. There's PULs, GULs, whole life. There's different products for permanent coverage. In fact, IUL is not a permanent coverage. It's a cash value life insurance. It's not permanent because it's not guaranteed to last forever. The only product that is guaranteed to last forever is a whole life. As long as you pay premium, coverage is going to be there. In an IUL, there's not such guarantee. But now,
well,
let's
I'm glad
go.
that you clarified that. I'm glad that you clarified that because again,
No,
I want to free up cash flow, as much cash flow as possible for the client to do what they want to do with their money.
what do you
That's
rather
my
have? $800,000 in a tax-free vehicle or $1 million in a taxable vehicle?
definitely not taxable. I would much rather a
So bigger
I would
number
much
in your
rather
account
tax
doesn't mean
free
more
as
cash
well
flow,
too.
correct?
I
The
would
bigger
prefer a
number,
tax free vehicle.
correct.
You know,
Prince, I
I
think I
mean,
think
I do have the flexibility. That's one thing I have flexibility with as well, is that I don't have to just do tax deferred accounts, or even just retirement plans. I can also do non qualified tax free investment accounts as well.
Prince, if you really want to help your community, I can help you get better term policies. Forget about IUL nonsense. If you don't want to specialize in IUL, leave it up to me. Leave it to the guys that we actually want to do those type of product. But if you
Well, I'm
really
very happy
want to
where I'm at.
help your community better,
I'm really, really happy where I'm at. Because
I know. For
again, like,
now, for now,
it's not just the insurance part for me.
I know
It's
it's a
the
culture.
flexibility of everything else I get to do.
You
You
can do
know,
that everywhere you go. Primerica is
I
not the
don't
only
know about that.
broker dealer.
Well, I mean, where I get to also do and use my MLO license,
You can do that on your own
they kind of
too.
are. They kind of are.
Primerica is not
I
giving you
mean,
anything.
it's
Primerica
good.
is
Well,
it's just a dealer, bro.
Hey,
But
I can say the
here's my
same
take.
thing for
Here's my
what you're
take.
talking about.
Here's my take, Prince.
You
You're
go for it.
fiduciary, right? You're fiduciary.
A fiduciary,
You're a
yes.
fiduciary, correct? Now that you know that are cheaper terms with better benefits and better companies, and you keep selling term policies with Primerica, you're not really fiduciary. Because now
Well,
you know, before, up until today, you didn't know. But from now on, so that's ignorance. From now on, it's a decision.
here's the thing. It's not. There's no ignorance in any capacity on my
Yeah.
side, right? Not in any capacity. For one,
Are you a doctor
I'm
of
not.
anything, or you just want
Yes, I
to?
went to school for acupuncture oriental medicine.
Oh, wow, for
So,
real?
so in the state of Florida, I am a doctor. Yes.
Nice, dude.
So to answer that question, I am an actual doctor. My specialties are in
Where in
autoimmune
Florida are you?
disorders and
Central, South,
Miami.
North? Miami? We're
Yeah, not
neighbors,
too
bro.
far from you. You're in Weston. Well, not
Not
Weston,
Weston. I'm in Fort
but you're
Lauderdale.
you're in Broward still.
I'm
Yeah,
Broward. I'm a Broward guy. You're a date guy.
you're in Broward. Yeah.
Good.
So, like, my fiduciary capacity is more towards the investments. So, and also on the mortgage side.
Okay.
So, there's that.
Oh, so not on a
Like,
term. You don't need to be fiduciary on a term policy.
the thing is, I don't have to sell insurance. I'm not limited to just selling insurance.
So now
My
we
conversation,
don't want to be a conversation about life insurance. And this is the circles that I always go. When we talk about life insurance and we talk about
oh
how
my
bad your term
goodness,
policies are,
Pedro, man,
then
like,
we
you
jump.
don't
Well, we're
have to,
not a term policy company.
dude.
We're an investment. When we talk about
Again,
all,
I'm talking about what I am able to do. I'm not talking
but
about
again,
everything else
so
like that. And you don't have to be like use the subtle or soft insults. We can be
I'm
very
not
direct.
subtle. I'm
It
not
is,
very
man. Well,
subtle. What I'm saying is because this is a circle conversation that I
I don't
always
think
have with
I think it's a
Primerica.
little bit
But
beneath you
let
to be that way, man.
okay,
Come on, guy. Don't be
there's
that
no
way.
need.
Don't be that guy. Don't be
I'm
that.
not trying to be a guy.
Don't be that. You're not
All
trying.
I'm
You're
trying to
just
say
being that guy. You're just
because
being that guy.
because what I read from you was talking about bad about a product, and now we're here talking about the
And
product.
here you're talking to me about not an IUL, but about a term life insurance policy.
Correct.
If
Because, dude, if I ask you
my
three questions
question,
about IUL, you're
like you
probably
did
gonna
a
miss
great
two.
job of showing me a term policy and how you're a broker and how you can sell also a term policy, which I think is fantastic. You can sell you can sell a policy that serves a much broader need for people,
Everyone
right?
needs a term policy at some point.
Everybody can use a term policy.
Yeah.
Now, aside from that, like my question to you was on the issues of the index universal life insurance
Okay.
policy. Okay, so like
But if you
now,
want to
like
get into that conversation, bro, if you failed at
if you were
term,
going to compare, but like
okay.
here it is, you failed at the insurance side of the conversation because you didn't address the index universal life insurance
I
component.
did.
You addressed the
I
term
did.
insurance
No, no, no,
policy.
no. You talk about
Bro, like
caps. Okay, caps.
where's the index universal life? Okay,
Okay,
the cap
caps.
on the
I'll show
cap.
you. Okay,
You
caps.
figured out that there is a cap. There is a cap.
I figured it
That's
out.
it.
No, bro, I knew that. There's uncapped indices. I knew that. I always knew that. This is not news to me. I just stumbled into an index, uncapped indexed. I always knew that. Now, since you want to get into IULs,
Show me the IUL.
the cost of insurance of an IUL goes up or down every year. For what you know.
It goes up as far as I know
How? Why?
because the person gets older.
And so what's the chassis of an IUL?
What's the what?
The chassis.
The chassis.
What's
Are we talking
what the
brake
IUL
points?
is built on what type of insurance?
Permanent insurance with a savings vehicle.
Wrong.
Okay.
The type of insurance inside of an IUL or UL, Universal Life, is annual renewable term. Do you know that?
Annual, it's an ART. I did just say that annually it increases, yes?
Correct.
Okay, so then, okay, continue with your
So
explanation.
the cost of insurance goes up or down every year.
It goes every year, Pedro.
Okay. Now, fees. Do you know something on the lines of net amount at risk? You know what that is?
Enlighten me.
Net amount at risk. It matters a lot when it comes to fees inside of an IUL. If you don't understand the concept of net amount at risk, you will never understand IULs and how the cost of the policy may go down every year.
Okay, and so the cost of the policy would be, what's the cost of the policy?
It may go down. It depends on where it started.
Pedro, for $750,000 worth of coverage provided in an index universal life insurance policy, how much would it cost?
The cost of insurance?
Yes, for an index universal life insurance policy for $750,000.
Okay. Let me run it with you, brother. Shoot, hold on. Let me first do this. You say 40-year-old.
43.
43. You're 43?
July.
Oh, you're 83?
Yep.
Nice, bro. We're the same age and everything.
Yeah, you're a Capricorn. You just had a birthday, didn't you?
God damn, someone did. Looked me up everywhere. Nice. I love that. I love that.
Yeah. I looked for you in the places that, you know.
No, that's fine. And you looked me up and you still showed up. Props to you, brother.
Hey, you know, the most important part was the IUL, the investment portion of it, you know, understanding that from
Is
your
there an
perspective.
investment portion of an
I
IUL?
mean, well, I don't know. You know, I want to understand what the uncapped rates are, you know,
But
and see,
does IUL have
I
an
want to
investment
understand the
portion
cost of
inside?
insurance. I mean, these are the things that I'm really focused on trying to understand what it is that you're offering.
But again, does IULs have investment portions inside?
Well, I guess not.
Okay. Gotta be careful with what you say. No, they don't have
You're
investments.
right. You're absolutely right about that.
Okay. For a 43-year-old male, non-tobacco, and let me see if now I can, much better. Can you see better? 43-year-old male, non-tobacco. Cost of insurance. First year is $49 a year.
What's the amount of coverage? I didn't see that. Could you scroll back down?
Oh, hold on. Oh, you wanted, hold on. My bad. You wanted $1 million, correct? 750, you
No,
said.
I asked for 700, just for 750,000.
Okay, good. My bad. Cost of insurance. $176 a year.
$176 a year.
Correct. Cost of insurance charges. In fact,
Yeah.
if we go
Hold
to,
on a second. I'm trying to figure out how to see the larger view because I can't. I'm on my phone, so I'm not on my laptop, so I can't see all the numbers that you're
oh, my
showing
bad,
me.
my bad. Right here.
Could you? And again, could you show me the coverage amount?
Oh, right here. Specified amount.
It's the amount
750.
753,000. Option 2 increasing. Switch to option 1 level. Initial plan. Okay, go ahead and scroll down, please. Okay, right there, percent of premium, age 54, 11. What's this age 11? What's this year 11 thing? What's that about?
What?
Why does it say year 11?
Oh, because this is year 11 on the policy.
Year 11 on the policy. What happened to the first 10?
Right here.
Okay.
It's even better for me.
Explain to me why premium amount. The premium amount is what?
$1,000 a year.
$1,000 a year.
I'm sorry, $1,000 a month.
So it's saying $12,000 a year.
Correct.
Oh, okay. So it wasn't $120
It's
a year.
$176 cost of insurance. The rest goes into the index, or is indexing the index.
Okay,
This is
so is this
$1,000 a month strategy, where the cost of insurance is $176.
are there any? I know you do different products. On this specific illustration that you're showing me, is there a cap on this one?
I did a multi-index. I did this one. 25% cap.
Can you zoom in just a little bit, please?
100%.
Okay, so you said that the actual cost of the insurance is $176,
Correct.
right? And then the remaining difference of the $1,000 per month goes towards a 25% high cap fund, correct?
Correct. Index.
Okay. So in no cap, all right, that's pretty damn good. 25%. Is the 25% guaranteed?
No,
It's not
not guaranteed.
guaranteed.
It's not guaranteed.
Okay.
It depends on the index and the performance of
Are
the
there
index.
any are there any what are the types of service fees that come with your annual renewable term on this in this regard?
The term policy? The
Well, no,
cost of
not the
insurance
excuse me. In terms of insurance.
is the ART. That's the cost of insurance.
Right. So just 176 and then
It goes up.
it goes up every year.
Correct.
Okay. Could you go back to that spreadsheet then?
100%. Hold on. Right here.
And so how do I have access to this money?
What money?
Well, the part that's growing, the part that's in
Okay.
the savings vehicle.
Do you know how to access, before I answer that question, I want to know if you know how to access the money inside of an IOL. There's 4 different ways.
4 different ways. No, go ahead.
Okay. There's withdrawals. You can take the money
Mhm.
out. If it's available, you can take it
Any,
out.
any downsides to the withdrawal?
What was that?
Any downsides to the withdrawal?
100%. Uninterrupted compound.
Uninterrupted
You're
compounds.
interrupting compounding. You're taking your money out. That money is not growing anymore.
Okay, so
And you
like,
can
but
take
if,
up to your cost basis.
up to my cost basis.
If
So
you take more than that, you're gonna pay taxes on the growth, just like you would on a Roth or IRA before 59 and a half.
okay,
Second way you can take money out. You can take what's called a fixed loan or a wash loan, where you take money out with the loan, money is coming out of your account, company's charging you a loan fee, and then crediting you back the loan fee. It's not it's not costing you anything. It's a wash loan. And the advantage to this is that you're not paying taxes on the growth. Disadvantage to this type of loan is money is coming out of your account. Your interrupting compounding. There's a third way where your money will stay on the account and you're using your money as collateral. Now you're borrowing the insurance company's money and giving them your account as collateral. Your money inside of this account will continue to compound with the index, performance of the index, and you pay a 5% fee, 5% interest on the loan, with the advantage that your whole money will continue inside of the index. And the fourth way is you surrender your policy. I don't want this product anymore. Give me the money back. And after year 10, you can take your whole money out.
Okay. So in that regard, respectfully,
Yeah.
right? In contrast, if I was using the old model of buy term and invest the difference, right? $176 per month. Yes. For the
$176 a year.
$176 a
A
year.
year. This is yearly cost, not monthly cost.
What's the monthly premium for the insurance?
$1,000.
So the
For the
$1,000
client
for
is
insurance.
client is putting $1,000 a month into the strategy, which is $12,000 a year. Out of those $12,000 a year, 176 is cost of insurance. It's weird, right? It goes against everything that you think you thought you knew.
No, it's not weird. It's just it's kind of the way that you're. I'm not. Maybe I'm hearing it. It's $1,000 a month
It's a
for the
$12,000 a year
strategy.
strategy. You can see it here. It's
The
a
$12,000
$12,000
a
a year
year strategy,
strategy, and the cost of
and
insurance is
is
175
176
$176 for the year.
for the year
For the year. $13 a month.
for $750,000 worth of coverage, and then so twelve
And you know what's
thousand.
crazy? You know what's crazy? If I go to when this client is 63 years old, the cost of insurance is 309 a year, $25 a month.
How much? How much will they have paid by age 100?
Total into I don't know because I stopped at 65. At age 65, out of his pocket, $264,000 came out. He paid
Okay, but
$9,000 in cost of insurance over 65. That's 25 years, 22 years.
why stop at age 65?
Because at age 65, you just want to retire. You don't want to continue paying. You can continue paying if you want to.
Okay, so now what happens if I stop paying?
Whoo, beautiful. Now, the policy will continue to compound. See? Will continue to compound right here. Oh, because I'm taking benefits out. I'm taking $75. Let me take that out. 1 second. Look. At age 65, he put a total of $264,000 into the policy. Now he has $437,000 in death benefit. Plus, he has $347,000 into the account.
What do you mean he has 400? How much does he have in death benefit? I thought the death benefit was for
for the
$750,000
first 7 years of the policy.
for the first 70 years,
Correct.
and then after that,
It
it,
decreased
it decreases.
to save the cost of insurance, to help him with cost of insurance. If you want $750,000 for the rest of your life, at age 65, he has $758,000 in death benefit. And the cost of insurance at age 65 would be $14,000 a year.
How much does he have in coverage by age 84?
Same thing, $750,000.
Well, you keep the same contribution approach, or did you
Yeah.
change that?
Well, you stop at 65, but you're going to continue having coverage. So by age 84, you said 84. He stopped at 65. He didn't contribute anymore. At age 84, so 19 years of not contributing, $1.3 million in coverage. He stopped 19 years ago.
And again, you can't guarantee the 25%
It's
return
not,
on
hold
this.
on, you don't, cap is not the return. Cap is the most that you're going to get on that index performance.
It's the most that I'm going to get on
Yeah,
that index
I'm
performance.
actually illustrating this at 6.42
Is there a
rate of return.
participation? Is there a participation rate?
100% on this index.
What's the participation rate?
100%. The index that I
100%.
showed you, yeah.
So if I something about that's
Yeah, I know, bro, because I'm telling you, everything that you thought you knew, it's completely wrong.
I tell you what, I'm gonna message you my email address. Send me over this illustration.
I'm
This
going to tell you this. Heck no.
Why not?
Because I know what's going on after. No. If you want, we can do
What's
this live.
what
Dude, there's plenty
I
of
can't.
people
I'm
here.
asking because I can't see your screen, and because there's some math that's not. It's just like in my
It's not
mind,
mathing.
it's not mathing. It's really not mathing.
Do you know why it's not mathing? Because everything you thought you knew is wrong. Because you've been taught by a company that do not sell these products.
No, I don't think that
Yes.
that's the case.
Oh, you don't think that I've done this with more Primerica people in the past?
I'm pretty sure you have, and I don't
You saw
discredit
the
you for
lives.
doing it. Like I said, I looked you up. I wanted to understand, and that's what we're doing, right?
Yeah.
Now, like if I could send you my hypotheticals, that's not a problem.
But
But
what?
see, like oftentimes,
But my question is,
here's one
I showed
concern that
you.
I'm
What do you
here's
need
my
to see?
concern.
What do you need to see?
Here's my
Okay, go ahead.
concern.
Go ahead.
I want to see if you wrote me a policy,
Hmm.
that's going to be in the policy. I don't want just
What's gonna be in the
an
policy?
illustration. Everything that you just showed me in that illustration is going to
Okay,
be
let me ask you a
exact.
question. Are illustration binding documents?
They're not.
They're not. They're
But
not part
see,
of the. They're not
see,
part of the
like that's
contract.
but that would be what I'm being. That's what I'm being intrigued by. That's where my
Prince,
interest comes
what
in.
are the?
If I'm gonna put money towards, if I'm
What
putting
is
a
a
thousand
complete?
dollars a
What is
month
a?
towards this strategy, bro,
Let me ask you a question,
I
Prince.
it's
What is considered a complete policy contract? What needs to have? There's three things that have to be
I run
inside of a
I do an
life insurance
application.
contract to be binding.
I do an application, do the underwriting, I send the payment. And if there's any medical examination needed, I do the
I'm
medical
going to
exam.
ask you again.
Okay, what
What
else?
needs to be inside of a life insurance contract to be valid and binding?
Exchange.
No, it doesn't.
What am I missing, Pedro? Aside from
Application,
paying
application,
application.
illustrations, and signatures.
Okay, so if you wrote me a policy and we do the application and I sign,
It's
is
binding.
my it's binding. Is my
Correct.
application and those illustrations gonna be it?
Yes, they're going to be inside of your contract.
And
Yes.
is it
Yes.
guaranteed?
No, there's guarantees and non-guarantees inside of a portfolio, bro. What is
How
guarantee
do you
on
give?
your
How do you?
investments? What is guarantee on your investments?
I could one. I'm finding for my clients investments that definitely give a return of the minimum that I can offer them.
What? Say that one more time.
You heard me. What didn't you hear?
What is guarantee on an investment?
That I'm going to do my best to get them a great return on their money.
What is guarantee on an investment?
Nothing.
Good thinking. So there are inside of an IUL, there are portions that are called non-guarantees. They're not guaranteed. There are
Okay,
assumptions,
but
hypotheticals.
now you're asking me on investments. You're not offering me an investment. So you don't have the same
No,
leeway
I'm
on
just trying
something
to
that's not
I'm
a
just trying to
security.
get you to the same point of view so you understand there's things that are called non-guarantees, hypotheticals.
Right, but like
Gotcha.
still even on the same view, it doesn't compute how you're not you're not securities licensed and you're telling me something regarding the potential growth. How do you offer projection without the credentials?
What credentials?
You froze up. Did you? What's
What
going on here?
credentials? What credentials do I need
How
to
do you?
index money?
So is it fixed? It's not a fixed. It's not a fixed
You're indexing.
thing.
You're indexing. You're not investing. You're indexing. What credentials do I need?
Pedro, I
Do you
appreciate your
do you
conversation, man.
understand the difference between indexing and investing?
I do, and right now I appreciate it, man. I'm getting a
No, you're good, brother.
headache.
I appreciate you. Thank you so much for
Likewise. Take care.
you too.
No problem. Take care.
So much material. But he's a cool guy. He was a cool guy. We gotta give him props. He was a cool guy. He tried to keep it civil. How do you have a conversation about life insurance with someone that doesn't understand life insurance at all? How do you talk about life insurance with someone that doesn't understand life insurance at all? See, term policy he missed. IULs he missed. Whole life he missed. Come on. And then he goes into social media talking about how IUL is robbing of people's generational wealth. It's sad. It is sad. Primerica, you gotta do better on your trainings, bro. I'm coming after you. And the dime. Dude, I mean, that was outrageous. He ran a dime on me of $50,000 a year. It gave him $8 million in coverage. When he said 8 million, I was whoa. There's so much to be done. There's so much to be done. This is what happens when they gave everyone an opportunity. Well, Michael, you gotta give someone an opportunity, but you gotta be a good trainer. How do you give someone an opportunity and you don't even know what you're talking about? No, I'm gonna clip this. I'm gonna clip the out of this conversation today. I'm gonna ask him about the dime. When we talk about dime and he gave me $8 million, that said it all. That said it all. They definitely don't talk about this an opportunity. Definitely not talking. And the thing is, for what I was told is that they blasting me on national trainings. Do you really wanna put my name on national trainings? Because this was gonna happen. People are gonna come to me trying to to act like they know. They gotta know more than me. There's a lady that came into my DM yesterday. So funny. I'm gonna actually do a video on this. She slid into my DMs and said that I gotta read the contract of an IUL. I said, well, we can read it together. Let's jump on the Zoom. And the funniest thing is, then she said, the thing is, Pedro, I don't try to educate people from the I know more than you standpoint. But I know more than you. Something along those lines. Let me see if I can show it. I miss this, but I don't have time lately for this. But is it Karina? No, not Karina. What was her name? What was the reason? Let me see if I find that. I'm gonna show you guys this. You're gonna laugh with me because she was so. Oh, right here. Look. So I'm going to translate this. Say, por favor, lean sus contratos de IUL que le venden. Please read the contracts, the IUL contracts that you're being sold. And I was like, are you ready to know what an IUL is all about? And then she left. Let me see if I can. You guys can see it better this way. I think you can. Okay. And then I told her, hey, you know what, sweetheart? Sometimes you just gotta stay a little bit behind look from 35 feet above, and understand that not everything that you've been taught, it's true. Most of the things that you think you know are induced, just like this guy, Prince. They're induced. You think you know, but you don't know. Oh, thank you on your behalf for trying to explain everything to me. Though my focus is not in to learn from a I know more than you way. My priority will always be to protect and educate my clients. Explain everything they need to know before they make a decision, an important decision. If one day you want to know more about the products in our industry and how they're being used to help people in reality, gladly I can show you. Though, only if you're ready to listen about something more than it sounds very good to be true. I said, well, lovely. Text me. And I give him my number. Oh, I forgot to tell you. Maybe you can work a little bit better on your accent so that people understand you better in English when you're talking about important things. And I said, well, can you show me on Zoom everything that you know? And ask her again. So you're a master of accents now. My focus is on serious professional conversations about financial education. This does not apply here. So I'm ended this discussion. I say, wow, your focus is so professional, but you don't want to educate? You know, sweetheart, first of all, you're talking from a point of authority, thinking that you know more than I do. I offered you a Zoom conversation or a conversation over Zoom and you haven't said anything. See, you slid into my DMs making claims. I asked you for proof and poof, you disappear. Very professional of you. And then you jump into her.
Mire, la industria financiera te ayuda a... Viendo un live de TikTok ahorita. ¿Sabías que en Estados Unidos existe una...
She does talk in English sometimes.
There's so much injustice going on right now in the financial services industry when it comes to insurance and investments, and it really bothers me because I am in this industry right now. There's a lot of agents out there that are selling products like IULs as an investment, and they're talking smack about agents that don't. They're saying that we're smashing their product. And to be honest with you...
You know what's sad? That...
Yo.
And I made a video about this. Most agents, and I'm not saying that there are not agents out there, bad apples, talking about IULs and investment when they're selling IULs. I'm saying it is partially true. I've never seen them, to be honest. I'm being honest. But I've heard you guys saying that there are people that are actually doing it. I haven't seen it, but it happens. It happens. There are people calling IUL an investment. I'm going to agree with you on that. But most people calling an IUL an investment, it's Primerica people. They call an IUL an investment so they can turn around and tell you that that is not an investment, which is weird. If they're not investments, stop calling it an investment. There's a lady, and Michael, I'll send you this. I know you did. I'm not saying that it doesn't happen. But I made a video because there's a lady, and check this out.
Watch this.
For the love of critical thinking, do not fall for these life insurance policies with investments that people are
Life insurance with investments. She called it a life insurance with investments.
For the love of God, do not call cash value life insurance life with investments. You know, it's not an investment.
billing all over social. They only work if you are super rich, and I'm
boy
going to
Matt
explain
over
why.
here.
And you can listen to me because I teach the stock market. I have an SIE, Series 7, 63, and 65, and
You should listen to me because I'm securities
Anyways, you can see the video it's in my portal. But what I'm trying to say is, guys, we gotta do better. I don't know where did I go? Okay, anyways, now I'm lost. We gotta do way better when we helping our clients. Let's see, hold on, because I lost my camera. Okay, good. I'm back. Primerica people, because I know there's a lot of people recording in the back because they have no backbone. They're afraid to actually comment here. If you're gonna talk about IULs, make sure that you know what you're talking about. That's all I'm saying. And if you're gonna talk about IULs, make sure that you know at least your own term policies, how to run a D.I.M.E method, which is the most simplistic way of actually. But the fact is, Eric and Michael and Prit, when you talk about a Primerica agent, they are the master of deflection. And now you're talking about term policy. Oh, but you know what? I don't really do term policies. I teach my clients into investment. Okay, let's talk about investment. You know there are ETFs that are cheaper than mutual aid shares, Class A share mutual funds. Oh yeah, but I also do mortgages. But you know the rocket mortgages are so expensive. Oh yeah, but I'm focusing on education and distribution. I'm in a distribution model. You know, okay, but you know that, and they keep jumping. So they're not masters or anything. They don't care. But this guy, he already knows that he has the most expensive term policy. Not most expensive, but it's one of the most expensive term policies out there. I don't know what they're going to do. fiduciary people. Yeah, bro, they keep jumping. They keep jumping. I've been very busy for the past 2 months, thank God. But I just wanted to do this because he jumped into social media in threats and said that iOS is a scam and everything. When I confronted him, he said, "Yeah, well, I'm happy to jump," thinking that he was going to educate. But you know what? He admitted it. He was the educated one. Love you guys. Have a wonderful day. We'll talk later.